Hello and welcome to ACCA Financial Management webinar for September 2006 attempt. This is your instructor Rizwan Mania. I hope you all are doing well. Kindly confirm everyone, is my voice clear, audible to all of you? You can confirm in the chat box, please. Is the voice clear to all of you? Okay, great. Thanks for joining this webinar for September 26th attempt. I will try my level best to make this webinar useful. As always, we do a lot of important things in the webinars. So, about myself to start first with, this is Rizwan Mania. My teaching experience is more than 18 years. I teach 3 papers, PM, FM, and APM at skill and professional level. We conduct webinars every quarter for different papers of ACCA. In fact, for all papers of ACCA skill and professional. The students who have grabbed first positions in different parts of the world, in my papers, the total count is more than 64. Now, how to remain connected with me during the webinar? So there is a chat box where you just confirmed initially about the voice. So you can ask questions using this chat box. Those students who will watch this webinar in form of recordings at a later stage, they can definitely message me as well for any help, guidance. You can talk to me, you can message me. This is my number. Note down for any help and guidance. I want everybody to join the ACCA FM Global WhatsApp groups, the global WhatsApp community of FM. So the team has just shared the link in the chat box. You can just connect to this WhatsApp global group for any updates, and definitely what all will be sharing the materials, the webinar materials in those groups. So make sure that you all join these groups and you get the access to all the free resources and also the webinar materials. So the group link has been shared. Those students who will watch this in form of recordings and they need to join the group, they can either message me for the group link or they can contact the admission department at this number. Okay, so admission department will be happy to share the group links with you people. The paper structure is the same. You guys know the paper structure where you have section A, B, and 3C. 3 sections, and it's a 3-hour exam. From time management perspective, it's 1.8 minutes per mark that is available to you. 15 objective test questions are tested in section A, 2 marks each. Then 3 case style questions are tested in section B, each having a weightage of 10 marks, followed by the 2 constructed response questions known as CRQs. Areas that are not tested in CRQs includes business valuation and risk management. So if they are not part of section C, you can expect one question coming in section B from these areas. As far as investment appraisal is concerned, yes, you can really ensure that you can really confirm yourself that yes, investor appraisal 1 question can come in CRQs in section C. This is what you see very repetitively coming in section C questions. Okay. So this is a small guess that 1 question of CRQ can come from investment appraisal, whereas 2 questions in section B can come from risk management and business valuation. The rest can come anywhere in section A, B, and C. The passing ratios of FM for the last 2 attempts, March 26 was exactly 50%, whereas a 2 percentage points drop age you can experience in June 26. You can see June passing ratio has gone down by 2% to 48%, which is not a good sign, but the best part was that our own passing ratio was very good, very high. Uh, these are some success stories of the students who passed in FM from WIFI in June 26 results. So you can see students pass their exam from different parts of the world and in big numbers. So this is a good sign. And I was happy to see the passing ratio of Wi-Fi was higher than the global passing ratio. So let's continue with the momentum. Let's take maximum benefit from these revision webinars and ensure that you pass in the upcoming September 26 attempt. All right. Major reasons for exam failure. I just want to run through those major reasons for failures. Definitely, you need to work on these areas if you feel that these problems are related with you as well. So first of all, not understanding the question requirements. This is very much related to CRQs, where you're not able to understand what the verbs are, what the objects are. So that is where people struggle. They do not understand the verbs like discuss, like state, like uh, evaluate. Evaluate doesn't come much at the skill level. So if you're not clear about the verbs, and verbs are what actions to perform. If you don't know what action you to perform, when it is explained, when it is discussed, when it is compare, so obviously your direction goes wrong. Secondly, we do not know what exactly is the subject matter uh, for what we have to give the answer, the core thing for which the examiner is expecting you to answer. So the object is not clear. That is why we go into wrong directions. And because of these things, our answer of CRQ is not according to what is required in the question. Time management always remains a very famous problem, a very famous issue for the students. Students struggle in time management. They leave the exam, they leave the paper. Even if you leave 5 marks, remember your marking will be done based on 95. So you are already in -5 from the start, from the word go. Do not cover the whole syllabus. Do not cover the whole syllabus, which is again not a wise approach, to be honest. We cannot go with selective study. If you opt for selective study, uh, you don't know what can come in section A of the exam, for example, and if you don't know, you will lose marks. Lack of practice is another problem where people know the concepts, they have seen the lectures, but they do not practice much. Sometimes overconfidence kills them. So the more the practice you do, the better it is. Failing to use brought forward knowledge, not very much applicable at FM level, but yeah, there are certain things that what you've covered in the previous paper, you need to have those things in your mind. Not good in all areas of the exam: application, knowledge, narrative, calculation. So refer to my exam performance report. Those students who were not able to pass in the last attempt, a simple suggestion to all of them is please go and check your my exam performance report. Your my exam performance report will indicate you the areas where you didn't do well. So now you have ample amount of time. Exams this time are in the second week of September. You have more days to practice, more time to practice. So just cash on it and practice more and more. Still, you have a lot of days left. Work on your weaker areas and try to ensure that you easily cope up with the weaknesses that you have. Section AOTs are creating problems. Yes. For students at FM level, people are struggling in Section AOTs, especially those coming from financial management function and environment. Those are the one where people are struggling massively. So please focus on these areas. Try to improve yourself in these areas. Struggling in business valuation and risk management OTs. Yeah, I've seen a lot of students complaining that they were not very comfortable with section B questions, scenario based for business valuation and risk management. As I earlier mentioned, that you can expect two questions coming in section B, one from valuation, one from risk management. And if you're not good at those, you automatically make it difficult for yourself to pass. Struggling in CRQ theory, I already mentioned earlier when we were at the first point, because we do not understand verbs and objects, you go into some wrong direction. Yes, fail to grab easy marks. So just keep this in your mind that there are easy numbers available. Don't say that there are no easy numbers available in the exam. There are easy numbers available. Just you need to focus on those easy areas. Remember, you need to pass the paper. To pass, make your life easier. Grab things in which you are very confident. Solve those things that you think you are really good at. You can score quick, good marks in relation to those areas. And that is how you can grab 50 marks easily. First 50 marks, easier should be targeted. There are easy numbers available. It is not that examiner only will give you questions that are very difficult. Maybe those will be bouncer questions for you. It's not the case. There will be some easy deliveries as well that you can easily play for 4 or 6. A message for cricket lovers. So target easy numbers, and we will be focusing on easy areas while we practice. Now, the revision. Now, the revision camp is a one that I wanted to tell you guys because the webinars, first of all, the webinar plans. Today is day one of the webinar. So we'll be covering important areas in day one. We'll be targeting the latest exam questions of March 26 and June 26. So I'll be targeting March and June 26 exam questions this time. We'll be solving those questions. We'll be revising topics in relation to those questions. Day two will also be a one where I'll be focusing on these exam questions, and we'll try to cover section C, A, B as well there. Then it's the revision camp that has already started. This is a paid batch, very much tailored for those students who are planning to do self-study or who are doing self-study. Those who are not taking any classes, they failed to pass last time, or maybe if it is their first attempt, I think it is important for you to focus on top 25 to 30 areas. Top 25 to 30 areas. So this revision camp will be focusing on top 25 to 30 areas where I will be providing you the recorded content for these areas, the practice material, the notes for these areas, so that you focus on hot areas, hot questions in the last days that will increase your chance of passing the paper. So interested students can join the revision camp. It has already started, which I did mention will include top 25 to top 30 areas, pre-recorded content with the practice areas. Plus, there will be two mocks that is part of the revision batch. One will be a live mock with a live debrief that I'll conduct, followed by one complimentary mock and complimentary recorded debrief. Grand revision will be conducted for the FM batch. So students who are who want to revise the entire content in 2.5 to 3 hours, this grand revision will be useful for them. So those who are interested in joining, you can definitely enroll yourself, especially all the self-study students. So the plan that we'll be following, in the revision batch, I just wanted to share this plan with you people. You can see here, once you enroll in the revision camp, you will get access to the recorded content, and that we prefer you to complete till the mock, which is to be held on 22nd of August. Yes, in order to complete the recorded content, a simple suggestion to all of you is focus on your weak areas. Areas where you think you're not good at, focus on those, cover those, and then come to your more strength areas. So first cover the weaker areas, okay, from the recorded content. So you'll get the access to the notes, the cheat sheets, all documents that can make your life easier. You will have access to those. Then the webinars. Yeah, today is 11th. So today we have our first webinar. Then we have our next webinar on 13th of August. Then it's the Game Changers series that we will be targeting then. Like we have day one. So these two are the September webinars, okay, that I'm conducting here. And then once we are done with the September webinars, the next is you can target the June webinars, and those will be the recorded webinars that you can see and cover the content. Okay, so let me just rectify the date. It's 12th of August today, where we are having this first day of September webinar. Tomorrow will be 13th. We'll be having day two. And then it's recommended to all of you to watch the June webinars on 14th and 15th. Then we'll have a live grand revision on 19th of August. Okay. Followed by the final mock, live, detailed mock debrief, that is live. Then we will be publishing the result for the mock and then the complementary mocks. Okay. So this is the plan of action which everybody can follow. Now the regular students, let me make this clear for them. The regular students, you are not required to enroll in this revision camp because you have all the resources available. What all things are important, I will be sharing with you people. Okay, that's not a problem. So regular students can follow the same plan of action with no problem at all. And the revision students who will join have to follow this plan. Now, for the registration, you can just go to our website and enroll yourself for this revision camp. Simple, go to the website, enroll, automatically you will get the access. Just in case, if you fail to do it, you can contact the admission department at this number and they will be happy to help you in relation to any queries you have. All right. So note down the number or go to the website. Okay. I already mentioned that the revision camp resources are already available to the regular batch. So they don't need to do anything extra. They just follow the plan according to my instruction that I'm sharing with you people. All right. Okay. So this was the revision camp. Interested students can definitely join it. I've made things very clear. Now the scope of the webinar. The webinar will be focusing on the knowledge base areas up to 20%. 80% will be practice based, where we'll be targeting section C, B, A, and I did mention I will target all the latest exam questions that have been appeared in March and uh, June 26 attempt. Okay. Yes. Before we proceed ahead, a simple plan of action is easy marks. You need to target easy numbers. You need to focus easy numbers. In section A, you will find easy marks. In section B, you will find easy marks. In section C, you will find easy marks. So your target should straight away be to focus on easy numbers. There are easy marks available for sure. You just have to target them, that's it. Right? So to know better about the easy numbers, my focus in this webinar will be there. On top of it, do watch this video available on Wifi's YouTube channel by the name of Smart Paper Solving Technique. That will help you to further understand where easy marks are and what should be your approach to grab first 50 marks to pass. Second, I will strongly recommend you to watch a video by the name of Examinable Verb video available on YouTube channel again. And this video will be very useful because through this video you will understand what actions to perform when they say discuss, when they say assess, when they say explain, when they say state. So actually you will understand the meaning of the verbs. Yes, to perform better in CRQs, you can watch Read the Marker's Mind video or a video that will help you to understand how the examiner will give you marks when it comes to CRQs, especially the theoretical part. Then you have my exam performance report video, a very good video. Those who are not sure where my exam performance report, they will find it. Those who are not sure how to analyze your own report, how to find out your weaker areas, how to understand the report. So now you don't have to send to any tutor for this. You can simply watch this video, understand it, how you will analyze your own report, find your weak areas, find your problematic areas, and then put extra attention to those areas in the upcoming days. So do watch this video to understand it, okay? The links have been shared here. The materials we'll share with you later on, so you can definitely watch these, or you can still go to Wifi's YouTube channel. Just write the names of these videos and you will be able to see and you can watch them ASAP. Okay. Remember, no question spotting. All self-study students, a clear message, no question spotting. You need to cover each and every area from Study Hub when it comes to reading part. So minimum things that I can recommend you, I'll just highlight here, is chapter 1, chapter 2, chapter 8, chapter 9, chapter 13, chapter 17, chapter 18. Okay, these are the areas I feel you should read to be able to cater the things properly. So I hope you can see the names here, the one that I've highlighted. Okay, so minimum reading you should do for these areas. And other than this, if you want to read any other chapter for more clarity, you can do. This is only for self-study students. Students who are part of my batch, they already have the notes available. They can target those. Okay. Done. Today's topic, investment appraisal. In this, lease versus buy decisions and business valuation. Let's begin with investment appraisal recap. Especially focusing lease versus buy decisions. Now, a company for assets needs to decide, should we lease the asset or should we buy the asset? So you need to decide either it's better to lease the asset or to buy the asset. For that, you need to consider options Number one, buy option. Number two, operating lease option. Number three, finance lease option. Now, if you think you have to buy the asset, so in that case, you need to remember very important thing, and that important thing is the assumption. And the assumption is, if you are planning to buy the asset, remember you are broke. You don't have money. Oh, what did you say? Oh, I don't need to assume it. Okay, okay, okay. I don't need to assume it. Okay, fine. So it's not an assumption. In your case, you're broke. Okay. So the assumption is that the company has no cash. Company will buy the asset by acquiring a loan. Company will buy the asset by getting a loan. So it's the loan through which they will buy the asset. Okay. Number two is operating lease. Now, what is operating lease? First of all, you need to understand your position. Are you a lessee or a lessor? So remember, you are a your position is of a lessee, which means user of the asset. You are always the user of the asset. Khalas. So in operating lease, it's the lessor who retains risk and rewards, not you, because you are lessee. Maintenance and servicing is the responsibility of the lessor only. Okay. The time period of this lease arrangement is short. 1 year, renewable, for example. And because lessor is the owner, so the asset is shown in the lessor's balance sheet, okay, or financial position. Alas. Now, the third option. Can you guess the name, anyone? Can you guess the name? Third option? Yes. Finance lease. Finance lease. Are you with me? Everyone say yes or no. Finance lease is a case in which again you are lessee, you are the user of the asset, but in finance lease, remember it's the lessee who is considered as the owner of the asset because risk and rewards are transferred to the lessee. Why? Because this lease arrangement is for most or all of the life of asset, which means significant life. Okay. So you lessee has this asset for the entire useful life of the asset. So you are the owner technically, according to finance lease. Maintenance servicing is your responsibility, and this asset is something that you can see in your own balance sheet. So your position in all the cases is of lessee. Okay, great. Then comes lease versus buy. Option number, lease versus buy cash flows. Which cash flows are we concerned here? If I go with buy option, scrap value and investment is my cash outflow. I will be enjoying the tax saving on investments. Maintenance cost is my responsibility. Any tax saving that I get is also what I enjoy. All right. So buy option, financing cash flows. Then comes operating lease. Lease rentals, tax saving on rentals is the financing cash flow to remember. In case of finance lease, because you are the owner of the asset, lease rental, tax saving on rentals, maintenance and servicing, and tax relief on maintenance servicing is what you need to consider. Okay? Right? So remember, these are the financial cash flows. Financial cash flows. For a lease versus buy decision, you need to consider these cash flows. And in these, which will be the final answer for you, depending on the cost. The lower the cost, that will be the answer. So while calculating these, the cost of capital should not be used. In fact, cost of borrowing should be used. Cost of borrowing, because the assumption that you don't have any money, you will get a loan and you'll buy the asset. So you just have to take a decision on the basis of cost of borrowing here. Okay? But if you don't have cost of borrowing, then you can use as an exception cost of capital. But remember, it should be after tax rate if tax is applicable in the question. Okay? So this is lease versus buy. Either I should buy the asset or lease the asset. I'll compare the options and see which is offering me the lowest cost that I'll opt for. All right. Now it's now time for the first question. Some CRQ based tips that you guys deserve. Please, while reading the question, find out verbs and objects so that you know what action to perform, verb, and on what you have to perform the action is object. Okay? Not only this, you will also consider whether the question is knowledge or application based. Now, while reading the question, you will see whether this is knowledge or application. What is knowledge based question? Any idea? A question that only requires you to write about the technique, the bookish knowledge, with no connection with the scenario, right? Whereas application based question is a one in which you have to link to the scenario, which you apply the knowledge, you have to link that with the exam question. So it's very easily identifiable when the question automatically will require you by saying for ABC company, do this for XYZ company. So you will get to know that this is application based. Number two, consider the marks that are available, because different requirements in one question, like for example, one question might have two verbs, two objects. So marks will be allotted according to the requirements in one question. Third, draft theory in multiple paragraphs. If possible, go with headings. Use spreadsheet to your advantage, because in this paper, you can use spreadsheet to save a lot of time by copy pasting the things. Once you've inputted the formula logically, you don't have to repeat it again by typing it or mentioning it again in the cell. You can copy paste intelligently and save time. Remember, 36 minutes is the time frame for CRQ completion. To save your time, ensure you start with easy CRQ first, the one in which you are very confident. You can skim the requirements, start with the one in which you think you can do it quickly, you can save your time, and that extra time you can spend on the other questions. Remember, to pass in CRQs in 2 questions, you need minimum 20 marks out of 40. Minimum 20. So your target should be minimum 20, like easy marks, I'm saying. I'm not saying you just solve 20 marks. Target should be to grab 20 marks somehow by solving easy things first. Okay? And anything that you get on top of it is a bonus for you. With these tips, it's now time to start the latest exam questions of March, June 26. Here we are, March, June 26 attempt question. Age 8 company, a charity company. So let's begin with this question. But before we read the scenario, I want you all to go through the requirements first. All right? Requirements first. Okay. Part A, evaluate on financial grounds whether age aid should buy or lease the vehicles. You should clearly show all the costs mentioned are treated. Okay, you should show clearly how all the costs mentioned are treated. 10 marks. So the examinable verb is evaluate, and based on financial grounds, you have to decide lease or buy. A special requirement that they have made here, clearly show how all costs mentioned are treated. So you have to, there is something here, I don't know, but there is something, that is why they have given you a special request that do tell the treatment of all the costs that are given here. Okay, done. Next, discuss is the examinable verb. Two reasons, okay, two reasons other than the present value of cost. Okay, why age aid should lease the vehicles rather than buy them. Okay, so you have to come up with points in favor of lease. In favor of lease. Two reasons compared to buy option. So this is the verb and object. Done. Explain is the verb. 3 is framework. So I'll explain it. Okay. You can see and. Now whenever you see and is something that will give you the idea that there is additional requirement as well. So let's see what is the additional requirement. How this can be applied by age 8. How this can be applied by age 8. So I'll come to this later on. I just highlighted it. This is for 6 marks. Okay. The previous is 4 marks. First is 10 marks, which means easily 10 marks for theory and 10 for calculations. Let's now target the calculations. First, Age Aid is a charity which provides a number of services for elderly, including day centers where they can attend and participate in various activities. Okay. The company is funded by donations, government grants, legacies, surpluses from the shops which it runs. Okay. Its services are mostly provided by volunteers. Okay, done. The company is planning to introduce a scheme providing regular hot lunches to be delivered to participants' homes. Okay. To do this, it will need to invest in specially adapted vehicles. Makes sense? The charity's trustees are currently considering whether to buy or lease these vehicles. Okay. As a charity, Age Aid is exempt from tax and therefore cannot claim, oh, exempt for tax. Yeah, this is a not for profit organization. Exempt for tax and cannot claim for tax allowable depreciation. If you are not paying it, no benefits. Okay, so this is a very crucial information. The vehicles could be bought immediately for 300,000 if you go with buy option. Maintenance costs are forecast to be 12,000 in year one. Highlight all sorts of numbers, percentages. Okay, in year one, increasing by falling rates in subsequent years. So please follow the instructions. 30, 20 in year 2, 30 in year 3, and 40 in year 4. Other running cost would be assumed to be 20,000 in year 1, increasing at an annual rate of 5% in each of year 2 and 4. Okay, done. Accounting depreciation would be charged on the vehicles at an annual rate of 20% reducing balance basis. Accounting depreciation, accounting. Okay. The vehicles would be assumed to be disposed at the end of year 4 at a residual value equal to their carrying amount at the end of year 4. Okay, equal to their carrying amount. Done, everyone? In year 4. The vehicles could alternatively be leased for a period of 4 years with 4 fixed payments of 80,000 payable annually in advance is a very important thing to highlight. Under terms of the contract, the lessor would include all maintenance costs for the vehicle. Okay, sorry, would incur all of the maintenance cost for the vehicle. The other remaining cost for the lease vehicle would be 75% of other running cost if vehicles were bought. Okay, would be 75% of the other running cost if vehicles were bought. Relevant discount rate is 9%. You need to decide whether to lease it or buy it. Okay, guys, are you ready? Everyone say yes or no. So tax is not applicable, okay? Okay. I want you to just give a try for maybe 2, 3, 4 minutes. Think of the relevant financing cash flows that you think should come here. Okay, just think and mention in the chat box. Please mention the chat box. Okay, guys. So now let's begin with the solution. First, let's target the buy option. So which cash flows are important to consider? In case of buy option, the financing cash flows that are relevant. First of all, in case of buy option, the asset life will be for 4 years. So it's 0, 1, 2, 3, 4, and okay, investment negative 300,000. Do we have any residual value? Yes. So how to work out residual value? There is a way out given to you that the vehicle will be disposed of at the end of year 4 at a residual value equal to their carrying amount at the end of year 4. So guys, how to work out this carrying amount? How? Accounting depreciation is based on 25% reducing balance basis, but because the tax is not applicable here, it's a tax exempted organization, so the organization will not benefit from tax saving on investment. However, working number 1 is what I'm now doing here in my working area. W1, it's a 25% reducing balance basis, which means here depreciation okay, or I can say cost, then depreciation. So the asset year 1, year 0, the cost is 300,000. Okay, year 1, let's work out the depreciation. Okay, now year 1 depreciation is simple, reducing balance basis 20% is 60,000. So cost after depreciation will be how much, guys? 240,000. Year 2, what will be the depreciation? Now on the value of 240, 20%, 48,000. So value after depreciation will be 192. Year 3, now the depreciation will be based on 192, 34,800. The value will be 153,600. Okay. Year 4, depreciation 20% value 122,880. Now this is the value known as the carrying amount. Okay, this is the carrying amount. And because the question mentions the residual value will be equals to the carrying amount at the end of year 4. So my friends, this 122,880 will be the value. Are you with me, everyone? Is this visible to all of you? Okay, great. So the carrying value in the last year will be 122,880, the carrying value. Understood, everyone? They wanted you to work out the carrying value or the residual value which was dependent on depreciation calculation. Done. Now, what is the other financing cash flow? Maintenance cost. 12,000, it says in year 1, negative 12,000. Negative 12,000 in year 1. Okay? But then it is mentioned that this will increase by it will increase in subsequent years by different rates given to you here. Right? So in year 2 the rate will be this multiplied by 20%, 14,400. Okay? For year 3, the rate will increase by 30%. 1.3, 1.3. In year 4, the rate of increase will be 40%. 40%. You can see the calculation that I'm doing here, everyone. Clear? Say yes or no. Done? Happy? Great. Perfect. Classical. Lovely. Okay. Now, what else? Other running cost. Oh, this is also a relevant financing cash flow. Other running cost. So it says 20,000 in the first year. Very much similar. Okay, great. Increasing at an annual rate of 5% in each of year 2 to 4. Each of year 2 to 4. Every year this means 1.05. Multiply this value with 1.05. Okay. Now, because the percentage is constant, because the percentage is 5%, now I am not required to input like I did here, because here the rate was 20, then it went to 30, then it went to 40. But here, because the rate is 5%, I can copy this and can paste here. Okay, copy and paste. So you can see I just copied the formula and with Control V, I'll paste here. Then here as well, I'll paste here. And you can check it's working perfectly fine. So it took the last year figure, incorporated 5% into it. Control C, Control V. Done. Everyone, are you with me? Yes, we are with you. Now, net cash flows. Let's net them off, everyone. Control C, Control V, 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 V. So what is going on? We can't see the figures. You will. Okay. Done, everyone? Clear? Now, after the net cash flows, let's find out the discount factor. Now, what will be the discount factor? 9%. It's mentioned, this is the relevant one, use it. 9%. Okay? So, either you can use the discount tables available in the paper, or you can apply the formula like 1 divided by 1.09 power for year 0, the discount factor will be 1 because we don't discount, okay? So just look at the formula. Is it clear? Okay, now I can copy, paste for year 2, for year 1, for year 2, for year 3, for year 4, and a quick check for you people. Working? Yes. 1 divided by 1.09. Now the power value is based on year 4 because I need 4th year discount factor. Smart working, smart working. Halas. What else? Nothing, bhai, nothing. Bhai means brother in Urdu, Hindi, okay? So I'll be using this word a lot. Brother. Control C. Control V. All right, everyone? Now, NPV of buy option. Let's sum up all these together. And the answer is 338552. A small difference of decimal, a small difference is not a problem. That is due to decimals. So that's acceptable. No need to be concerned about it. Is that clear, everyone? Say yes or no. Okay. Let's make this look a bit more better. So this is the option available on your CBE platform. Directly go here. Everything vanished. Not a concern. 10th option here, okay? 10th option. So negatives will go in bracket automatically. Things will be rounded off. Commas will also be here now. And you can see this final shape. Looks good? Everyone, are you with me? Say yes or no. Done. Khalas. So buy option NPV is 338552. I hope no problems. Let's quickly jump towards the operating lease option. Why I said operating lease, I don't know. Let me just look at the question. Okay, it has just mentioned lease option here. Okay. Lesser would incur all maintenance cost. So it's very much simple. If lesser is doing all maintenance cost, that's good. Lesser is taking the responsibility. It seems to be an operating lease. Anyways, right now we are not concerned about it. So the details are, let's use something that we have already written above. Okay. Now, what about the rentals? The question says 4 fixed payments of 80,000 payable annually in advance. Now, what this means? Annually in advance. Come on, can you tell me what this means? Annually in advance means you will be paying the first lease rental at the start of year 1. Year 1. At year 1. You will be paying at the start of year 1. Technically, if you see. Okay. So, start of year 1. But you know the rule for discounting purpose. Anything that is at the start of year 1, anything that is at the start of year 1, we show that in year 0. I mean to say in the previous year. So yeah, the rentals are in the start of year 1 because advance means at the start. Advance, prepaid. But from discounting rules perspective, anything which is at the start of the year is shown in the previous year. So I will start my first rentals, 80,000. Year start of year 1 will go in year 0. Start of year 2 will go in year 1. Start of year 3 will go in year 2. Start of year 4 will go in year 3. Are you with me, everyone? Say yes or no. Okay? Done. Okay. It says maintenance cost of the vehicle is the responsibility of the lessor, but other running cost for the lease vehicle would be 75% of the other running costs if vehicles were bought. Okay. So there is one cost that I will bear as a lessee here, and that's other running cost. And for that, what they mentioned is this will be 75% of other running cost if you buy the asset. So just look here, 75%. So I have the figures above. I just have to apply the formula. And once I'll do it, my friends, this is the figure I'm getting. The rest is Control C, Control V, V. Just a quick check for you people. Is it working? Yeah, this is working. This is working. 23,153 into 0.75. All right, everyone? Clear? Happy? Very nice. Lovely, beautiful. Done. So now let's calculate the present values. Control C, V, and V. Discount factor will be at 9%. Okay. Same rule, 1.09 to the power 0, copy, paste, 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 present value, okay. And let's work out the net cash flows now. I mean to say NPV. So this is the answer. Everyone, see, they have mentioned it. There's nothing to be worried about. Is it finance lease or operating lease? To be honest, why you get yourself into trouble? Just follow the instructions. It says lease. It says this cost will not be covered. This cost will be covered. Why you think extra? Why you challenge yourself by asking questions? Should I know this? Or do I know this? What kind of lease it is? Leave it, yaar. Leave it. Follow the instructions. Do you think they are confusing you here? No, they have mentioned lesser will incur maintenance costs. Khalas. Other running costs for leased vehicles. It is saying leased vehicles will be 75%. Take it. Khalas. Why you challenge yourself that do I know this concept or not? I'm able to pick this or not. What difference will it make? Nothing. Okay. Done. This could be some routine, basic cost of running. Yes. That anybody uses the vehicles have to incur. Done. Now, what is the decision? You have to evaluate on financial grounds, number one. Number two, you should show clearly how all cost pension are treated. Okay. So first of all, which option is financially viable? So I can simply mention, I'll get the marks for the comment. I cannot lose this. These are easy numbers. The option of lease seems to be more financially worthwhile, as the cost of lease is lower than the cost of buying the asset. Okay, done. Okay, plus depreciation cost is not included. It's not included in present value calculations, as it is not a cash flow. Khalas, everyone. I did mention that depreciation is not covered here. And the treatment also mentioned for depreciation, and I've evaluated. The comment will give me marks. Simple, easy numbers. Do not miss on the comment part because you will lose easy numbers. I hope this is clear to all of you. Yes or no, everyone? Done. Khalas. Same 10th option. Same 10th option. So that things look more better. So I have done the calculations. Lease rental straight away. Running cost was mentioned in the question. 75% of the other running costs if vehicles were bought. So it's so simple. I have the figures above for other running costs in case of buy option. I just took 75% of that. That's it. Nothing else. Okay? Done. The rest is all, I hope, no problem. Clear. Done, everyone? So all the calculations are done. I hope no questions. Okay. Next. 2. Discuss two. Discuss two reasons. Discuss is the verb. Two reasons why age aid should lease rather than buy. Why? Why? Just two reasons. Okay. Why the company should lease vehicles rather than buy them. Now, first of all, do you think this is a knowledge-based question or an application-based question? Knowledge-based or application-based question? This is a this is an application-based question because they have used the name of the company. Why age 8 should lease? This means if you can link with age 8 at any point, do it. Do it. Okay? So why it is better? So first of all, let's see why lease is better. Age 8 is a not-for-profit organization. Yes. The company or Age 8 is funded by donations, government grants, and the surplus that they have on their own. Okay? So this is very much clear that because it's a charity organization, and the company may need to come up with a one-off amount of 300,000, because if you purchase it, it's a large one-off expense. Okay, so they need to come up with this large one-off expense, and I know they can go with loans, but maybe because it's a not-for-profit organization, getting a loan, maybe paying interest could be a difficult part for them. So first thing is lease, rentals will ensure a regular cash outflow will ensure it's a come on, how you plan the answer. You've seen the verb, you've seen the objects. Object is why they should lease. Marks are 4, 2 points divided by 2. For 2 marks you have to write. Lease rentals will ensure regular cash outflow. Okay, let me do something for this first. Cash outflow for age 8 who is dependent on donations and government grants. So fixed income so for fixed income it will be good to have fixed rentals outflow. Okay, are we clear, everyone? Yes or no? Okay guys, clear? Done? I'm sure you can see this. So buying the asset may make it difficult for them, and rentals will be good. What do you say? Will be good, because their fixed income sort of will be easy for them to plan the rental out, rental payments. They can budget it easily. So things are very simple, to the point, manageable if they go with this option, because it's a charity based organization with sort of a income that is fixed. They can cover the regular lease payment from those. Otherwise, massive investment needed, fund requirement, maybe they might not be able to grab from the government for loan. It will not be easy for them. Understood? Clear? Okay, great. So you can see the quantum of my answer for 2 marks. It's very much visible. For 2 marks, this is how much you have to write. In fact, you should ensure that your point of view is completely communicated. That's it. Okay. Now, what else? I can see in the scenario, see scenario based, maintenance cost, right? Maintenance cost is something that the lesser will handle it. So this is a safer option for age aid company. Any major issue with okay. Just imagine if they were handling it, they need to handle themselves, no matter what the amount is. So, kind of, it will free their concern. It will make things look better for them. So, I think a very good scenario based point. And that is what I mentioned earlier, that see, this is a scenario based point. Will make your life easier. Application, I did use scenario, and this will give me 4 easy marks. Everyone, is this clear? Say yes or no. Are you all with me? Done? What do you say? Yes? Easy? Manageable? Very nice. For next one, are you ready? Okay, let's move towards the next one. Explain is the verb. What to explain? 3 E's framework. Okay, I'll explain it, which means I will explain what economy is, what efficiency is, what effectiveness is. Okay? Okay. But it's not just explain. The word and is there. How this can be applied by AJ. Again, application part. Link with AJ. This is a 6-mark requirement. 6-mark requirement. One verb, one object, and this is other object. So I can say one verb, explain 2 objects, 3 framework, and how this can be applied. Now, for a company like AJ, it's a charity organization. So because it's a not-for-profit organization, they don't earn profits. They need to give confidence to their donors, government, that the funds that they have, they spend those funds considering 3 E's. They provide value for money. Value for money. Okay? Age 8, being a charity or organization, needs to ensure it provide services that are considered value for money in order to give confidence to its investors like government and donors. Okay? Following are the areas to consider in value for money: economy, efficiency, effectiveness. Okay. Now, economy. I have to explain what economy is. You know what economy is? Economy means the cost of input resources should be minimum. Should be minimum for an acceptable standard. So, this means the cost of input, I'm explaining it, okay? Input resources should be minimum for acceptable, based on acceptable standard. For an acceptable standard, this should be minimum. Okay, done? Clear? Everyone, are you with me? Okay. Now, explanation has been done. Explanation has been done. What's next? How this can be applied by AJ company? This is the link. If you don't do it, you will not get complete marks. Now, what do you mean by economy in case of AJ? Now, what AJ does? Number of services for elderly, including day centers where they can participate various activities. The company is planning to introduce a scheme providing regular hot lunches to be delivered to the participants' home. Okay, hot lunches. Now, they provide meals or they want to provide meal. Okay, so economy will mean here the ingredients used. Hello, input resources for a meal. What will be the input resources? Ingredients. So the ingredients that are used for the meals should be cheapest, but cheapest doesn't mean pathetic. Cheapest doesn't mean pathetic. Cheapest considering acceptable quality standard, nutritional standard. It's not that go with the lowest one and kill the people. No. So here, what it means, let's connect. In case people who are weak in theory, see how this is how you have to handle it. It's an application based, you have to link with the scenario. There are two things. First, I've answered what economy is. I'll get marks, not complete. Now I'm linking with age 8 in case of age 8. The ingredients to be used in providing meals should be cheapest for the required quality standard. Okay. Now, whatever quality standard you want to achieve, it should be cheapest for that. That's it. Are we clear, everyone? Done? This is economy. You cannot go beyond the quality standard, okay? So required quality standard which is in line with the requirement of charity organization. Okay, efficiency. This means the outputs should be maximum from given input resources. Now this is efficiency. The output that you get should be maximum from the given input resources. Okay? Done? Efficiency. Now how can you link efficiency with AJ here? What is the output? Providing hot meals. Providing hot meals. Now who is working for AJ? Guys, I can see its services are mostly provided by volunteers. Okay? Volunteers. Now, volunteers are the people who will cook meal, who will serve meal, deliver meal. So, they don't have ample of staff working. These are volunteers. When volunteers are there, definitely there'll be a constraint. There will be a short in supply of volunteers. So whatever your input resources are, like the people who are working for you, the volunteers, so the output should be maximum, which means they are able to provide maximum number of daily hot meals, and this is efficiency. Okay? So let's connect. In case of age aid company, volunteers will be limited who will cook and deliver foods, deliver meals. So efficiency here will mean maximum hot meals are cooked and delivered from available limited resources. Okay? Or volunteers. Are you with me, everyone? Understanding the basic game behind drafting. Link with the answer. Okay? Now, effectiveness. Come on. What is effectiveness? Ensuring the objectives are achieved by providing the services. Okay? In case of age 8. Now, why age 8 is there? Age 8 provides number of services for elderly, including day centers, and the providing them meals. Okay? So, what will be the objective? That is, they fulfill the requirements of the people for whom they exist. Okay? So, in case of age 8, it should fulfill the requirements of people receiving the services, that is, elderly people should receive satisfactory day center services and hot meals for lunch. In other words, age 8 should fulfill the purpose of this charity based organization. This is effectiveness. Khalas. Guys, are you with me? Say yes or no. Come on. Understood the theoretical part. 6 mark requirement. 2, 2, 2, 2. 2, 2, 2, 2. Not just knowledge based definitions. Link with the scenario to get the marks. Link with the scenario to get the marks. Are you with me, everyone? Say yes or no. Is the drafting clear? So, a simple message. Look at the verbs and the objects first. How many verbs? How many objects? Number two, knowledge based, application based. We'll take a short break here. And after the break, I will answer your queries and we will move ahead. See you after the break. Don't go. All right, guys. So, welcome back. If you have any questions, I just saw one question before the break, and that was in relation to efficiency. Safia asked me. Efficiency basically is the input resources should give you maximum output. So, because the volunteers are your input resource, so first of all, they are limited in numbers, obviously, because it's a volunteer based work. And we have to ensure that we get maximum output from those, like hot meals is the output that they will provide to the elderly people. So efficiency here means from the given resources like volunteers, the output should be maximum like hot meals. Okay, so I think I've explained this part, and it's now time to move towards the other area, that is business valuation. A quick recap, and then we'll start a lot of practice. So, it is important for an organization to value its business, to know what is the worth of their business. such a business worth is important to determine because it will help you in making investment decisions. It can help you in mergers. It can help you in acquisitions, in case of liquidations. So it is important to know the worth of an organization. Okay. So even as an investor, you want to know what is the worth of this X organization, because if you get to know the worth of the X organization, you can take decisions about buying their shares, selling their shares. Is the current value overvalue? Is the current value or is overstated, understated? So for that, it is very important to determine the value of the business. Okay. So in order to determine the value, you have different methods to come up to the valuation of the business. You can use some cash-based methods to value the equity of an organization. You can use some income-based methods to value the equity. You can use asset-based methods. So if I give you a quick recap, if we use discounted cash flow as a technique to calculate the value of equity of an organization, so we will work out the value of equity based on the future cash flows expected from that organization. So we'll discount all those future cash flows to the present value. If I discount all the future cash flows to the present value, so the present value is the worth of that company. The other method is using dividend growth model, DGM. This is the same model that you experience when you were when you cover WAC, because the same model is used to calculate cost of equity there, but because it's business valuation here, so the same model will be rearranged now to work out P naught, and P naught means share price of the company. Okay. So once you have the share price, you can multiply this with the number of shares to work out the value of equity. Correct? So constant dividend uh, assumption or fixed growth in dividend assumption is the useful assumption, and you can work out share price depending on the information given in the question. So if it is a dividend growth model, to calculate cost of equity, you need to work out share price. For share price, you need to see either it is a constant dividend case, which means dividend will be given in perpetuity, and this will be a constant dividend. So this is the formula: P naught is equal to D divided by cost of equity. And if it is a growth based dividend situation, so you need to work out the growth rate, and then you need to calculate the value of share price. That is P naught. Okay. So remember, when you are at WAC, the same dividend valuation model is used to work out cost of equity. When you come to business valuation, you rearrange the formula now for share price. Okay, so cost of equity is something that will be given to you here. It will be given to you here, and when it comes to business value, weighted average cost of capital, this is what you need to find out. Okay. So DGM is a useful way to calculate share price for the company, but it has certain drawbacks, like a company that doesn't pay dividend at all. For such a company, you cannot work out share price using DGM. Plus, the share price that you work out using DGM might be different to the market share price, might be different to the prevailing market share price, and this could be due to the growth rate that you took in the calculation. The growth estimation uh, was different, like the one that you used in the formula was different to what investors were expecting in the market. Okay, because that will have an impact on the share price. Similarly, the cost of equity expectation in the market was different to the one that you used in the calculation. So in that case, the share price that you will work out will be different to what is in the market. Okay. Now, after the discussion of valuation of equity using cash-based method, there is another group through which we can work out the value of equity, and that group is known as earning-based valuation, income-based as well. Here you can use price earning ratio method and earning yield method to calculate the share price. So again, the resultant is share price. Okay. Now, as per this method, okay, it is the PE ratio. In first case, you use price earning ratio, which indicates how much investors are willing to pay for the company $1 earning. So here the simple rule is you use PE ratio of proxy. Proxy is basically, for example, you are company A, you are planning to acquire company B. So company B will be known as a target company. Okay. So company B, industry average PE ratio, company B, industry in which company B works, okay, its industry average P ratio, or company B's competitor P ratio will be the proxy P ratio, which means company B, target company's industry or competitor P ratio will be called as the proxy. So proxy means company B, target company's industry P ratio or its competitor. So you will use this proxy P ratio and you will multiply with company B, which is the target company EPS, a company that you are planning to acquire. So target company EPS into proxy P ratio will give you the share price. Challenges are, will you be able to determine the right PE ratio? Right PE ratio, very crucial. Okay, right PE ratio, very crucial. Because maybe the competitor P ratio and the target company itself are of different size. Maybe the reputation is different. So this could be a challenge. Number two, if your competitor is a is a is a public company, is a listed company, and the target company that you are planning to acquire is a non-listed company. So this means the P ratio that you have used of a listed company will give you a share price based on that listed company. So you cannot rely on that higher share price. You need to make adjustments. You need to make adjustments in order to make it acceptable, make it relevant for the target company. So if a listed company P ratio is used for valuation of an unlisted company, adjustment will be required. Okay. Earning yield method, very similar, but here the proxy will be earning yield. Proxy here will be earning yield with the same rules of proxy, and target company EPS will be used in this case. Again, it is important to ensure that right adjustments are made if proxy earning yield is of a listed company, listed competitor that is being used for an unlisted target company. All right. So this is another group through which you can work out the value of equity. Okay. There is another group which is asset base, through which also you can work out value of equity. These two we have covered for now. Now the other valuations other than equity includes preference shares valuations. So for preference share, you also work out the share price. You value it by a formula of D divided by KP. Okay, so D is the dividend and KP is cost of preference shares. Now, again, when you are at WACC or when you are dealing with weighted average cost of capital section, so in WACC, you work out cost of preference shares, but here it is given to you. It is given to you. In WACC, you work out this, but here it is given to you and you work out share price. Coming towards the valuation of debts. So in case of debt valuation, it is irredeemable. This is the formula. The formula is I divided by KD. Okay. But remember, in all the debt cases, you have to take before tax consideration. Before tax consideration in business valuation. Okay. Because in business valuation, it's the investor's perspective we consider. So it's all before tax in business valuation. Okay. So if I'm calculating the market value of irredeemable, so it's interest before tax, KD before tax. Both will be before tax in business valuation. Okay. So you work out market value. Like for equity, you work out share price. For preference share, you work out share price. For debt, you will work out market value of the debt, considering before tax information. Because it's business valuation, it's the bank's perspective. Investor is a bank, for example, bank perspective. And for bank, it's income before tax. Interest income is before tax. Okay. Redeemable market value, very simple way to work out. Present value of future interest, again before tax, and redemption amount. For convertible, the way is present value of future interest, again before tax, plus, in convertible, we go with higher off. So you compare redemption with conversion value and you opt for the higher off option. So the key point to note here is in business valuation, or I must say, whenever they ask you to work out market value of any debt, remember, any, the rule is simple. The rule of thumb is every information will be used before tax. Khalas, before tax. Okay. Whenever you are calculating market value of any sort of debt. Khalas. Okay. Done before tax. Now this in comparison to WACC. When you are calculating cost of debt in WACC, cost of debt. So there you take after tax. In WACC, you always take everything after tax. Because in WACC, the perspective that we consider is of a company. A company pays interest. A company pays interest. And on that interest, company will get tax saving. Okay. So always we take after tax because company will pay interest and on interest company gets tax saving. But in business valuation, it's not the case. So in business valuation, it's the investor's perspective, a person who is receiving the interest, right? And in WACC, it's the company who is paying the interest. So in case of WACC, it's after tax, company perspective. In business valuation, it's before tax, investor perspective. And whenever you're calculating market values, always before tax. Done. Market efficiency. The stock market efficiency means what? It means the shares operating in that stock market, the shares that are in that stock market, the prices of those shares, the prices of those shares incorporate what kind of information? What kind of information? So, if the stock market is completely efficient, like I can say efficient market hypothesis, concept of EMH. According to efficient market hypothesis, all the shares in the stock market, their prices will reflect fully, fairly, all relevant and appropriate information. Okay. So according to efficient market hypothesis, share price fully, fairly reflect all available and relevant information. Okay. So now there are three types of market efficiency. Come on, guys, are you with me? Type 1, weak form. Type 2, semi-strong. Type 3, strong. Now, come on. In weak form of efficient market, share price will incorporate past information. Only past information. Okay? Right? In semi-strong, share price will incorporate past information, and any publicly available information will also be incorporated into the share price. The impact will be in the share price. In strong form, share price will incorporate past information, publicly available information, and any undisclosed inside information. Impact will also be into the share price. Okay. So now, abnormal gain. Now, any person who have access to any information that impact any information, the impact of which is not in the share price, can take benefit known as abnormal benefit. Now, for example, in case of strong form of efficient market, anyone having access to insider news, cannot take any advantage, because the impact of that is in the share price. But in case of semi-strong, anyone having insider information will be able to take abnormal advantage, will be able to enjoy abnormal advantage, because that insider news impact is not in the share price. So when you have insider news, like company will pay a good dividend of that amount, it is not disclosed yet, you can take advantage of this insider news in semi-strong market, because the impact of this is not in the share price. So you can take advantage. Nobody knows about it. So once this information will become a publicly available information, share price will go up. And if you bought the shares before the announcement, you will get shares at a lower value. When it will go up, you can benefit from it. You will gain from that. But in case of strong form, you cannot, because the impact of this has already been in the share price. So if you have this information, if you have access to this information, doesn't matter, you cannot do anything. You will not be able to obtain any gain from it. Got it? So abnormal gain will only be available in relation to an information, in relation to any information, the impact of which is not in the share price. If you have any information, the impact of which is not in the share price, then you will get abnormal gain. Otherwise, you cannot, because the impact will already be incorporated into the share price. All right. It's now time to move towards section B. Some tips in MTQs. Read the scenario, because 5 OTs are connected with the scenario. Please take care in relation to fill in the blanks, rounding of instructions. 10 marks, 18 minutes. So try to solve within 18 minutes. To ensure you do that, start with easy OTs first. There are 5 OTs. Out of 5, 2 will be easier ones. Try those. That will give you quick marks, less time. You can spend the remaining time on the difficult ones. Got it? Plus, to ensure that you score and solve all the 3 MTQ section B questions within the time frame, start with the easy MTQ first. Quickly you can skim which scenario is your strength. Like if one question of section B relates to business valuation, the other relates to risk management. If you are good in business valuation, start with business valuation first. Okay? It will save your time. You can solve that within 18 minutes, plus you can score high. So remember, the target is very simple. Like in CRQs, minimum 20 out of 40. In section B, you need 18 out of 30. 18 out of 30, which means 6 marks per MTQ. 6 marks per MTQ. Let's make the task easier and easier and easier. 6 marks per MTQ means just 3 MTQs in each case study you have to ensure should be correct. 3 means 6 marks, means 18 marks out of 30. Simple target. So the minimum is 3 MTQs should be correct per case study to give you 6 marks in that case study, 18 marks in 3 case study, ensuring you pass in section B. All right, ensuring you pass in section B. Let's begin with the question of March 26, June 26 attempt. Orla company is a listed company. It's important to highlight it. With the cost of equity of 12% KE, any kind of percentages, numbers, you should highlight it. Okay. Which plans to achieve a growth rate of 4% per year for the foreseeable future. It's a listed company. KE is 12 and want to achieve a growth rate of 4%. Company operates in an industry with an average PE ratio of 9 times. So average PE ratio is given. The ordinary shares of the company have a nominal value, should highlight it, of 0.5 per share. Ordinary shares, okay? Extracts from the financial statement of the company are as follows. Statement of profit and loss. Operating profit before interest and tax of 111 million. Interest expense 6. Profit before income tax 105. Tax at 20% is 21. Profit for the year 84. Ordinary dividends 49. Retained profits 35. Statement of financial position, share capital, reserves, total equity. Non-current liability includes long-term borrowings, current liabilities. You have total liability now, and total equity and liability. The long-term borrowing consists of loan notes paying at an interest of 6% per year, which are redeemable in 4 years' time at a premium of 5% to the nominal value. The before tax KD is 7%. Okay, very simple basic information. Let's start solving it. What is the value of company using price earning ratio method, P ratio method? So you need to work out the share price. Okay, so we need to work out the share price. So share price is equals to proxy PE ratio into EPS. So I have the PE ratio of 9 times here. This is the industry PE ratio, 9 times, okay, multiply by earning per share of Orla company. Orla wants to calculate its own market value, right? So how to work out the Orla's EPS? Now, what information I have here is profit for the year. This is PBIT. This is the interest expense. You deduct from it. You get profit before income tax of 105. After the tax, you get profit after tax of 84. Now, this profit after tax is known as earnings. Okay, earnings. Now, instead of making this per share, I can use the earnings directly here. Why make this per share? Because the answer that we want is value of the company. Okay, value. So 84 is the earnings into 9 times, and the answer is 8 nines are 756 million. Halas. Simple, yaar. Very simple. Got it? Say yes or no? Yeah? Good. So you are calculating Orla's value, Orla's EPS or earnings into PE ratio of the industry. Guys, are you with me? Say yes or no. Clear? Hello? Yes or no? Any responses? Or dead completely? Okay. What is the value of Orla using the dividend valuation model? Now, using DVM, we need to work out. Okay. So, what's the formula of DVM by value or share price is equals to D1 divided by KE minus growth rate, D1 divided by KE minus growth rate. Now, as per the question, do you have cost of equity here in the question? So, a quick look. Cost of equity is 12% given to you right at the top. Okay. And growth rate is 4%. 4%. So I have KE, I have been given with the growth rate. Do I know the dividend that they have given? Yes, 49 is the dividend that they paid. What do you need? Nothing. Nothing, yaar, nothing. 49 is the current dividend. I can call this as D naught into 4% growth rate is what they are expecting. I'll grow this to make this D1. Cost of equity is 12%, growth rate of 4%. Halas. Easy, simple, solve it quickly, grab quick marks, move on. The rule is simple. At least 3 OTs in MTQ case study should be correct. Peanuts, walnuts, cashnuts. So what is the answer? 637 million. 637 million. How can this be wrong in the paper? I cannot visualize this. How? Who will do this wrong in the paper? Simple. No confusion. Got it? Clear? Okay. So everything is so clearly mentioned here that you just have to use it. Nothing to be worked out here. What is the market value of loan notes of Orla company? Market value of loan notes of Orla company. Okay. Now, first of all, let's look in the question what kind of loan note they are using. It's a redeemable loan note to be repaid in 4 years' time at a premium of 5%, and the before tax KD is 7%. The coupon rate is 6%. Okay. So it's a redeemable loan note. Now to work out market value, the rule is here cash flow, discount factor, present value. So present value of interest and redemption amount. So in 4 years' time, this will be redeemed. Is that right? In 4 years' time, this will be redeemed, everyone. Yeah, so 1-4 will be the interest rate. Coupon rate is 6%, which means 6% into nominal value of 100 is 6. Should I convert this into after tax? No, it's market value. We will not do this. Okay. In 4th year, we will redeem at 5% premium. Okay, very nice. So 100 into 1.05 is 105. Halas. Now, it's time to calculate the present value. So these two cash flows now will be discounted using before tax KD of 7%. What? What did you say? Yes, before tax KD of 7%. Okay. So I will use 7% as my discount rate before tax. It's market value, and 4 years annuity factor 7% from the discount table will be 3.387 that you will multiply here, and the 4th year single discount factor using 7% will be 0.763. Okay. So you will get the present value. You will get the present value of these two. If you add them together, you will get a value here. And what will be the value? Okay, just make sure what you need to work out is the market value. Okay. And what are you getting here is market value per bond, per loan note. Okay. Per bond, per loan note. So it's 100.44 per bond. Got it? Are you with me? Yes? Now, to convert this into market value, what I need to do? Nothing special. Nothing special. The long-term borrowing is of 120 million. Okay, 120. Book value. This is the book value. Okay. So what will I do? What will I do? 120 divide by 100 nominal value into market value that I just worked out of 100.44, and this will give me a value of 120.5 million. 120.5 million. Is that right, everyone? Clear? So we have to convert this into market value loan note. Are we clear, everyone? Say yes or no. Come on. Yes. So it's the market value of bond that you were required to work out, which was not enough. You need to convert this into the total market value. Okay. Now, 3 questions done. Theory. Which two of the following statements relating to capital market efficiency are correct? Capital market efficiency are correct. So obviously 2 statements are correct here. So just read it, filter out the ones that are not the answers. In a weak form of efficient market, weak form, share prices take several days to respond to new piece of information. No. Weak form of efficient market, or I must say in a weak form efficient market, share prices reflect past information. Past. But there is no parameter, no criteria given or explaining what past information is. There is no parameter explaining that how many days it will take to become a past information. Nothing given. Nothing given. So this is not correct. There is no parameter that after several days this will be classified as a past information and share price will incorporate this information. Nothing. There is no criteria of several days. This is wrong. Khalas. In a weak form of efficient capital market, weak form, okay, again, technical analysis cannot produce abnormal gains. Technical analysis. So is this true or not? Yes, this is true. Because what is technical analysis? Technical analysis means, come on, based on past price movement, okay, you take decisions in the future. It will not work because the impact of those past movements have already been into the share price. So you cannot take any advantage in that. Okay? Wrong. Sorry, correct. You cannot take any advantage. Got it? In a strong form efficient market, guys, are you with me? Abnormal gains can be obtained using insider knowledge. In strong form efficiency, the insider impact is already into the share price. So anybody having such knowledge will not be able to get any sort of advantage. No, you cannot. Wrong. Halas. So last is the correct one. In a semi-strong, efficient market, share price will increase, which means share price will react. Share price will increase means share price will react following the public announcements. Following the public announcements of a positive NPV project. Yes. In semi-strong, any publicly available information, and this is a publicly available information. Once the announcement will be made about positive NPV project that company is investing into, so share price will go up because the market will react. The share price will go up because it's a semi-strong market in which publicly available information. Okay, once publicly available information becomes public, once a new information becomes public, so the impact of that will go into the share price, which means share price will go up because it's a good news. It's a good news. Yes, this is correct. All right, everyone. Clear? Yes or no? Yes. Which two of the following statements about noise traders, noise traders are correct? Noise traders. Let's see. Noise traders typically follow market trends. So is this correct that noise traders follow the market trend? Yes. They see what is going on, what is the market trend, they react to it. They react to it. Okay? They react to it. So they do get affected by the market trend. Okay. They make rational decisions. Rational? They don't make rational decisions. They make irrational decisions. Okay? They don't use fundamental data. They don't use fundamental data. Because they overreact to a good news and a bad news. They overreact to a good or bad news. There's no rational ground or basis on the basis of which they take the decision. They overreact or they overreact to a good or bad news. Done. A and C. D is not the answer. Why? Which says well-timed investment decisions. What kind of timing you're talking about? Their decisions are not well-timed. They just follow the trend. They overreact. They have no rational behind it. So how can I say well-timed investment decisions? Wrong. So the correct answers are A and C. A and C. All right, everyone? Done. So easy questions give you quick marks. More time for the difficult ones. I hope this MTQ is clear to all of you. All right, guys. Some practice for section A now. Standalone OTs. First tip, cover the whole syllabus for section A. Whole syllabus. Question can come from anywhere. Number 2, Per question, average time is 3.6 minutes. 3.6 minutes. Okay? But for this average to achieve, remember, solve easy OTs first. Easy OTs first. Solve first 4 to 5 easier OTs. In 15, all will not be difficult. Pick easy ones and solve them in less time. You will score in less time. Okay? Done? So for section A, remember, out of 30, you need 16 marks. You need 16 marks out of 30 to pass. To get 16, 8 OTs should be correct. So out of 15, just 8 if are correct, you get 16. You pass in section A. Khalas. Khalas. My friends, to ensure 8 are correct, solve the easy OTs first. Okay? Easy OTs first. Make sure fill in the blanks. Questions are dealt properly, considering rounding of instructions. Otherwise, you will lose marks. For narrative OTs, theory-based, find out the distractors that are not the answers, okay? Filter them out. Plus, do consider is and are in the questions, because for questions they do mention following is correct. So there will be just one answer. But when they say following are correct, are, so more than one. More than one. Clear, everyone? Yes or no? I hope these tips should work well for you. Okay? So now let's do some rehearsal. Okay. Example 1. Section A OT. Blue company has 5,006% preference shares in issue. Okay? With a nominal value of 0.5 per share. 0.5 per share, which are currently quoted at 0.59 cumulative dividend. Cumulative dividend, it says. Okay, cumulative dividend. Company pays tax 25%. Cost of capital of preference shares. Preference shares. See, when they say cost of any source of finance, when they say cost of any source of finance, remember it's WACC. When they say market value, it is business valuation. When they say cost, it's WACC. So KP, cost of preference shares, is what I need to work out. Now, what is important? Very simple. D divided by P naught. D is dividend. 6% rate is given to me. This 6% will be applied on what? Nominal value. Par value of 0.5. Okay? Which is 0.5. Divided by P naught. P naught is share price. Share price is 0.59. But this should be X dividend. What? This should be Ex-dividend, everyone, are you with me? Ex-dividend. So, to make this ex-dividend, what I need to do? I need to deduct the current dividend. And what is the current dividend? You can work out in numerator, which is 0.03. Okay? So, deduct 0.03 current dividend. Khalas. So, if you will not deduct, your answer will be wrong. If you take here nominal value of 1, your answer will be wrong. So, 0.5 and cumulative means deduct the current dividend. So, the answer that you will get here is 5.4. Done, everyone? Say yes or no. So, read the question. These are isolated OTs. Read and act. Clear? Done? Yes? All right. That's it, guys, for day one. I hope you enjoyed day one webinar of FM. What's your feedback, guys, everyone? Was it worth it? Come on, I need some feedback. Emoji based at least. CRQ, theory, section B, section A. Was it good? All right. Thank you very much. See you tomorrow with day two with more practice, more revision. Until then, take care.